Now, this one isn't about financial or tax advice. This is just about explaining why the numbers don't do what people think they do. Now, who are we talking about? When people say tax the rich, they usually mean billionaires. But income tax doesn't work that way. Long before a system would ever reach the wealth of people like Musk or Zuckerberg or Gates, most of the people would be affected would be high-earning professionals. Now that means people like doctors, surgeons, specialists, financial roles, leaders of regular mid-sized companies, not people like Jeff Bezos. My name is Richard and welcome to Ronc Industries, the industry blog for investors where we're pro-wealth, pro-growth and pro-industry. And today in industry, we're going to try to take a look and see what would really happen if we tried to tax the rich. Now, high earners in Australia, we need to look at who the high earners really are. Neurosurgeons earn around about $600,000 a year. Surgeons and anaesthetists sit around about $400 to $470. Medical specialists sit around about the $350,000 mark. Now, these seem like extraordinary amounts of money, but let's face it, the day that you or I might need them, I won't be haggling over dollars and cents. To that end, average income is roughly around about $104,000 to $108,000 before tax. That's the actual landscape. So let's look at what they already pay. A $600,000 salary already would pay technically about $236,000 in income tax. That's before we talk about increases. Now, $600,000 might seem a little bit unrelatable, so let's pick a number in the highest tax bracket that might be a little bit easier to grapple with. A $250,000 salary pays around about $78,600 in tax. Now, these people are already carrying a lot of the weight of the system. The top tax bracket applies to income over $190,000. And at that point, it's 45 cents in the dollar above 190,000. Now, if we raise it by 3 cents up to 48 cents, which is a 6.66% increase, the $600,000 salary pays around about $12,300 more per year. If we raise it by 6 cents up to 51 cents, which is now a 13 1/3% increase, they will end up paying around about $24,600 more. Now, on paper, that sounds meaningful, but here's why it doesn't matter. At a government budget level, $24,000 is, at current going rate, it's pretty much nothing more than a rounding error. Even if you add this across every high earner, it doesn't move the needle. And remember, these jobs are the rarities. This is where we get to the billionaire problem. Now, ultra wealthy individuals, and I'm talking the ultra wealthy, they don't earn money like employees. Their wealth is in equity. And that means their wealth comes from shares, ownership, owning of assets. Equity isn't income, and unrealized gains aren't taxable. Loans aren't taxable. So when people say, let's tax billionaires more, income tax wouldn't even necessarily touch them. Not in the way that some people would expect or hope that it would. Raising income taxes doesn't fix bad fiscal policy. It hits professionals. In the examples above, we only touch the top tax bracket. Now, in Australia in particular, there are 3 brackets below it before the tax-free threshold. And if those get adjusted, then it's the working middle class that will get hit the most. Slugging the top rate would barely raise marginal revenue, and it avoids the real issue, which is government spending. That's the lever governments don't want to pull. So in short, you can't tax your way out of structural spending problems, and that's the uncomfortable truth. I'll see you in the next one.